Hi, thank you for joining us today. My name is Lynette. I'm the founder of AT Pros Inc. We are a specialized accounting, tax, and CFO service for specialty trade contractors. Today, we're going to go over revenue, gross profit, and net profit, and what the difference is between the three of those. It's going to be plain English for contractors. So go ahead and get your pen and paper out, and let's get started. If you're unable to attend the entire video, go ahead and add it to your watch later videos, and that way you can come back to it. And be sure to like and subscribe also, and turn on the notifications so that you can get more notifications for any videos that we put out in the future. Anyway, so let's get started. Today we're going to go over the revenue, gross profit, and net profit and what they mean. Plain English for trade contractors. Please leave any comments or any questions that you have in the comments below. If you have any other questions or anything like that, I will give you all of my contact information at the end, plus a special little gift for you. So, because busy doesn't mean profitable, and profitable doesn't mean you have cash. So let's get started on this. So we're going to go over three different business numbers. They are completely different numbers. They tell different stories about your business. The first one is going to be about your revenue. So your revenue is going to be any total money billed out for jobs. This is going to be the invoices that you send out. It does not mean that it's the money you collected. It's just what you send out. So that number could be a little misleading because you'll look at the bank and you'll look at your invoices and they'll be different. And that's okay, because we're just going to worry about your total invoicing today. Your gross profit is going to be what is deducted that is directly associated with those invoices. That's going to be your subcontractor labor, any other subs that you have, your supplies per job. This could be equipment rental, the labor of your employees that are directly tied to those jobs. It shows if your jobs are profitable. The healthy target for this is about 35 to 55% for trade contractors. So let's say you had revenue of $500,000 and you had $300,000 in job cost. $200,000 is your gross profit. Now we're going to talk about your net profit. Your net profit is what's left after all expenses of your business. So we take your revenue less your gross or your expenses that are directly tied to the job, and then we take all the other expenses. That's going to be your rent, your insurance, the payroll, the owner's payroll, I said insurance, your truck expenses. It's going to be all of those different things, your employee benefits, it could be your office expenses, all of that. That's the real scorecard for your business. A healthy target after all of those expenses is 10 to 20%. So 10 to 20% of your gross revenue should be sitting there in net profit. If you had a $500,000 business, 10 to 20% after your $200,000 or your $300,000 of job cost, your $160,000 overhead, that would equal about $40,000 net profit. That is after the owner's payroll or pay also. So that's kind of a goal. So I wanted to share a situation where it's Tony's Roofing. This is the example. He made $800,000 in revenue. He thinks he's doing great because $800,000 in revenue is not too bad for a solopreneur, you could say, a solo owner. But he doesn't do any financials. He doesn't have anybody helping him with his monthly calculations or anything. He's just kind of flying blind, you could say. So he's like, we did 800,000. That was a great year. It's not bad. It's not bad. He checks the bank account to decide if he's doing okay. So if he has money in the bank, he's like, great. That sounds great. He has no idea what his gross profit margin is. He has no idea if he's even marking up his bids right. He doesn't know if he's accounting for all of his expenses properly when he does do his bids or, does the job itself. He mixes his overhead and job costs together. So he's including all of the vehicle expenses in his gross profit. When he's calculating it out, he may be overpricing jobs or he might be underpricing jobs because he doesn't know what his true numbers are. He never looks at his profit and loss statements, even if he has them. He just puts them in a desk drawer. He forgets about them, gives them to the accountant at the end of the year, or assumes that the accountant's taking care of everything. So he prices the jobs based on what he feels. He has no percentages. He's flying blind. So the real numbers are, for him, $800,000 in revenue, looks great. His gross profit is $240,000. That's at 30% of the revenue, which is too low. His overhead is $225,000. That leaves him with $15,000 on $800,000 in work. So he worked all year for 1.9 cents on the dollar. Tony's not doing very good. So let's use the same scenario of Tony's roofing, same revenue, but different awareness. He now knows his numbers. He's working with an accountant that goes over these things with him every month. They go over the calculations. They double check his invoicing, everything like that, to make sure that his percentages are being done correctly. So he reviews his profit and loss, all three numbers. He tracks his gross profit margin per job type. He raises his prices on low margin jobs by 12%. The low margin jobs, sometimes contractors will give a little bit of a discount to, because it's like, oh, it's not that big of a job. But those actually take a lot of time. And if you're looking for the higher margin jobs, you really need to make sure that you're pricing the low margin jobs properly to be able to maintain that same percentage of profit. He has cut overhead by $30,000 because he found waste in his numbers. He may have found that things were being misclassified. He may have found that he was able to discontinue some services. He was able to find out how to lower his taxes per year. Those things, he found those by working with an accountant. He now targets 45% of gross margin on every bid. So he has now come up with this pricing with his accountant to be able to make sure he bids every job to where every job has a 45% gross margin. He knows what those numbers are, and he never has to guess what they are anymore. He pays himself an $80,000 salary on purpose. And the reason why he does this is that his numbers should be included in his billing. So when he comes up with a bid, his hours or his time should be calculated in the labor markup. So the results, the same $800,000 in revenue, he is now going to keep $112,000 in net profit. He knows which jobs make money. He bids more of those. He stops chasing volume. He's focusing on margin. You can give out 10 bids, and if you only get 2, that's fine if your profit margins are accurate. He's paying himself consistently for the first time since he's owned his business. He is now operating his business as an asset, not just a job. He is now not only the business owner, he does work in the business, but he's now building a business. So now we're going to go over some things that I can help you with. We turn your numbers into a story that you can act on. So some of the things that we do is we prepare financial statements every month. We look at those gross profit and net profits every month. We present those in plain English, either on a monthly or quarterly basis based on your needs. We calculate those gross margin numbers for you. We analyze those numbers and make sure that you are marking up your jobs the correct way. One of the ways that we do that is through job costing, which is something that we'll go over in a future video, because that could be a little bit more complicated, but it basically tracks the real cost against what you bid. And then that way you could stop losing money on the jobs that you thought were profitable, but they actually weren't. Pricing strategies is how we help you build those rates. We want to make sure that you're charging the correct amount of labor. Sometimes some companies have to charge a little bit more than others, but that's why you have to focus also on the jobs that you want to make sure that the clients understand that this is what you do or what you specialize in. Overhead review. This is where we start cutting costs. We start looking at your expenses. We check to see if things are a need or a want. If it's needed, then we absolutely will back you and help you make sure that you get that item. If you do not need that item, or if it's something that we can cut, we'll help you guide you through that also. We also offer virtual CFO services, and that's a little bit deeper dive into your industry. It comes up with strategies, your targets, and we are kind of your accountability partner every month. We also do some comparisons to other, businesses in your industry to make sure that your percentages are being competitive. So if you're making $800,000 in revenue, that really means nothing if you're only keeping $15,000. So what I'd like to offer you today is you can click the description in click the link in our description and schedule a free 30-minute call with me to see how we can help if you're interested. You can come back to this page later and do the same thing. You're more than welcome to send me an email at info@atprosinc. You can visit our website at atprosinc.com, and you can also click and schedule an appointment there. Also, there is a handout on this topic. It's a little bit more detailed than what we just went through really quick. It is free. So go ahead and click the link and sign up, and that will be directly emailed to you. Like I said before, if you have any questions, though, please feel free to ask. Also, be sure to like, subscribe, turn on the notifications, and share this with anybody that you may know that may learn a little bit. And they can also get the free PDF and everything too. So watch, learn, grow. Financial education built for specialty trade contractors. We hope to see you again. Thank you very much.